Hello and welcome to Trading Hour. I'm Surabhi Upadhyay, and with me in the studios is Pavitra Parekh. And what we're looking at now is a screen that's showing some semblance of, an attempt to recover. I'm not calling it a recovery, but an attempt to recover, Pavitra. I guess it's been a pretty interesting last 24 hours.
Oh, absolutely. I mean, and look at the way just the past 1.5 hours or so have moved, right? So extremely volatile. But the rest of Asia is still looking quite weak.
That's right. We've still got red on the Asian screens, but even those markets are off the lowest levels of the morning. And I think that's what Indian pools are also taking some heart from. So if you're looking at the major markets across the neighborhood, the Hong Kong market is now down just about 1.2, 1.3%. The Taiwan market's down about 1%. Some of these cuts were as deep as 1.7, 1.8% earlier on in the session. So there's some recovery over there, and that's what's playing out on our screens as well. Though it's a very narrow range on the index. I mean, we've been around that flat line, not gone anywhere. These are 5.5-month lows for the Nifty. The last time we were at these levels, it was in early October 2022. So need to keep that context in mind. Today, there's a lot of move towards FMCG and consumer stocks, the perceived safe havens of the market. That's where the money seems to be shifting. So that's one very interesting trade that's going on. You'll see that in a Nestle, in a Lever, in Tata Consumer, a lot of these stocks. That's the FMCG index. It's the best performing on the screen. On the flip side, there is metals. And that's obviously the global-facing sector where there are still plenty of uncertainties. Hindalco, Tata Steel, JSW Steel, these are stocks. Now, let's pull up the contribution plate. What's also working for the bulls is that banks are trying to see this pushback move now because the bank Nifty has been oversold so aggressively. And remember, today is Thursday. So in any case, we'll get to the expiry factors playing out. The expectation, Pavitra, is that towards second half, we should start seeing some short covering because there are massive shorts in the system. So the weekly expiry phenomena perhaps can also lead to some of those shorts to cover, so at least some more green on the screen.
Yeah. All right, it'll be interesting to see how that plays out. But, you were talking about the metals index. Just today, it's seen a 2.8% cut. That's the kind of pain that we're seeing in that space. Let's pull up some of the names. Surabhi has mentioned the larger ones, but take a look at Vedanta, NMDC, JSPL. Cuts of, 4 to 5% that we're seeing on these stocks. So this one definitely seeing a lot of pain. A lot of the banking names also once again under pressure. By the way, if you take a look at just the PSU bank index, for this week, it's down 6.5%. The private bank index is down around 4.5%. So that is, what's been going on with the banks. Some of the names are up on your screen as well. For Reliance, I mean, it is in the red today, but there has been a recovery that's come through. This stock also, I mean, seeing a 4% cut for the week. So this is one to watch out for. What's doing well in addition to consumption, like Surabhi was mentioning, is the entire crude impact playing out, right? We saw a 5% dip in crude oil prices overnight. So ONGC, you have BPCL, HPCL, IOC, all of these holding up well in the green, like you can see on your screen. And then the paint companies as well. The usual suspects when the oil prices do move lower. So that's what's happening with the market. And let's actually kickstart the show by talking about the space that is in focus most, and that is the metals pack. So Manisha joins us to bring us all of the details. Manisha, sharp cuts seen in all of these stocks as well.
Oh, well, yes. As you spoke about metals, and we've seen a sharp decline come in for metals. If you look at the copper prices, it has been a 2.5% of a cut in last two trading sessions, and we're trading at a 9-week lows onto this one. The steel prices fell 3% overnight, and we are trading in the negative in the Asian markets right now for these as well. Well, it has been about the rebound in the US dollar. There is safe flight happening to dollar and gold and silver. So the precious metals and dollar is the only thing that is trading in the positive right now. The banking instability has weighed on to the broader demand forecast, and that's weighing on. And when you look at the data that came in today morning, China new home sales have seen a decline for a 10th straight month. That's weighing onto the markets as well. And even as the inventories in Shanghai have declined, the copper inventories are the lowest since the month of Jan, but that hasn't really been supportive right now because the Chinese demand at best has been uneven. And with what's happening in sense of risk aversion, the sell-off in equities and other major high-yielding currencies as well, metals as a sector also has seen a decline. So in this week itself, we have seen copper, aluminum, zinc fall anywhere between 3 to 4.5%. Steel is down 3.5% as well. So a negative move inching towards as we end towards the week here.
Okay, got that. Manisha, thank you very much for the updates. So metals definitely in sharp focus today. And those are some of the factors that are playing out. A lot of it is just that risk on trade. Well, let's also focus on the corollary. So as crude has been extending its losses, Avendus Spark has written a note on how OMCs stand to benefit. Abhishek is here with the details. Abhishek, what is Avendus Spark saying?
Well, Lavender Spark has written on OMCs, they say that there is a game to be played on benign crude. So they have upgraded all their recommendation to buy from AD. The new target price for BPCL is around 440 rupees per share, IOCL at 105 per share, and HPCL about 270 per share. They say that 2 out of 3 global agencies expect demand to outsupply the, outpace the supply growth. So China reopening plus ATF to drive the demand growth going ahead. Lower oil prices is favored by the fact that higher global crude inventory is there, excess China crude and product inventory, and also the fact that headroom is there in Russia as well as OPEC's production. So recession could actually further propel this. Crude could be in the range of $75 to $85 per barrel, and OMCs typically outperform during stable or low oil prices. So OMCs would have stable or better marketing margins, low working capital requirement, a better GRMs along with the fact that lower fuel and loss. So stocks are trading at near decadal low in terms of valuations. BPCL at about 1.3 times, IOCL at about 0.8 times, and HPCL at about 0.9 times. Back to you.
Abhishek, thanks a lot for getting us all of the details and the highlights from this report. BPCL is the top gainer on the Nifty right now. But by the way, some important news at the bottom of your screen. Like we were telling you, this is a CNBC-TV18 news break on the Samvardhana Motherson block deal. It is now confirmed that promoter Sumitomo Wiring has sole stake in the company. 3.4% stake is what has changed hands, and Sumitomo is the seller of this. They're saying that this is to fund partial debt repayment. So that is Samvardhana Motherson. Stock is down 11% as we speak. But let's do one thing. We'll get into a short break for now. There's lots more stocks which are in focus today, so we're going to talk about them when we come back. Hi guys, welcome back. You're still tuned into Trading Hour. There's been a sharp recovery in the Reliance stock, like we were telling you. Take a look at that. It's currently at the high point of the day. I mean, it has still seen a near 3% cut for the week, but it has moved up significantly in today's trading session. In fact, there's a note by JP Morgan where they maintain their overweight call on the stock. So Sonia is here to tell us about that. Sonia?
Well, thanks a lot for that. Very interesting note, given that Reliance Industries has been an underperformer this year. The stock is down 10% this year compared to the Nifty, which is down about 6%. In that context, JP Morgan has put out a note where they maintain an overweight and they have a target price of $29.60, which is well above the current market price. Now, they say that this is a great opportunity for long-term investors to get into the stock, given the kind of correction that we've seen in Reliance Industries. There are multiple catalysts over the next 2 years, and they list them down, stating that one of them, of course, is the potential listing of the consumer businesses. Then they have the petrochemical growth, the large 5G capex monetization, as well as the ramp-up that they're seeing in the new energy businesses. So given all of that, there are several growth triggers for the company going forward, and hence this is a good time. They also mention how FII ownership in Reliance Industries is standing at a 6-year low currently, and the stock is now just 2% above JP Morgan's bear case scenario. So they feel like the worst of the performance is already in the price, and now there is a big upside from here. Hence, this buy call coming in from JP Morgan. Back to you.
Okay, got that. Sonia, thank you very much for the update there. So that's JP Morgan with a view on Reliance. Of course, the standard disclaimer applies. Let's move on now. Bank stocks have been in focus and they have been facing a lot of pressure so far this year. Morgan Stanley says in its note that it is expecting loan growth to remain fairly healthy. Abhishek is back with us with some more details. Abhishek, traders are beating the life out of bank stocks, but what is Morgan Stanley saying on the business?
Well, if you take a look at the stock price, year-to-date performance, Bank Nifty is down around 10% as of yesterday. Individual stocks in the Bank Nifty have declined anywhere between 5% to 16%. The top losers amongst the financials are SBI, a decline of about 15.7%, Bajaj Finance, a decline of nearly about 13%, and Axis Bank, a decline of 11.75%. So valuations have now declined to a multi multi-year low. Valuations on a one-year forward price to book value for SDFC Bank is about 2.6 times. This compares to ICICI Bank at about 2.55 times, which is on a consolidated book value. Even Kotak Bank is at 2.6 times on a consolidated book value. Bajaj Finance, which used to trade on a one-year forward basis, price to book value of 8 to 10 times, is now down to about 5.3 times. Now, there is a conference, meetings that's happening at Morgan Stanley conference, wherein various lenders are saying that they remain bullish on the loan growth front. However, they expect the net interest margin to decline in FY24 when compared to FY23. So the key takeaways from those, highlights is the fact that loan growth will remain healthy. The focus is on higher margin segments. So typically your unsecured or your retail segment, which have a typical higher yield than corporate portfolio, or SME portfolio, you can see growth happening over there. And net interest margin to moderate next year as funding costs catch up. Asset quality, that trend will remain benign. And retail term deposit, that's the focused area for all the lenders, which continues to accelerate for them. Back to you.
Us all of the details. By the way, take a look at the Nifty Bank right now. It has recovered a fair bit. It is up 160 points right now.
Thank you.
From the low point of the day, we're seeing a 500-point gain on the Nifty Bank. The Nifty in itself is up around 80 points from the lowest level as well. So we're currently seeing around a 0.3% of a gain that we're seeing over there. Like I told you, Reliance is up a fair bit, and a lot of the banking names. SBI at the high point of the day. You have Axis, HDFC, Kotak. You name it, the big banks have seen a big recovery. So let's do one thing. We'll get into a short break, but there's lots more market action coming up for you on the other side. Stay tuned.
Welcome back. So the market's trying to sort of gain a bit of momentum on the green side. We are almost 45, 50 points higher. That is the day's high. It's a decent recovery from the lows of the morning, so no taking away from it. There's a bit of a move on a couple of auto stocks. Now, actually, the two-wheeler makers. There's iShow, which is up almost 2%. There's Bajaj Auto, which is up about 1.5% as well. If I look at Hero is actually also gaining 0.5% higher, but lesser than the other two. In a bit, we'll get Sonia in to talk about the latest in the two-wheeler segment, because there seems to be interesting competition in the entry-level bike segment, in the under 100cc. And guess what? It's not a listed company. It's an unlisted entity, Honda, which is really stirring up competition in the market. Sonia is now with us. Sonia, tell us more. What is this new bike Honda is launching, and could it be a bother for the listed players?
So for now, Hero, the stock is not really reacting to it. Looks like it's not too perturbed by the competition. But these are initial days, right? Honda yesterday launched a 100cc Shine motorbike. Now, just to put into perspective, the Shine brand of Honda has done very well. It's one of the strongest brands. It's available in the 125cc plus space. But now Honda is entering into the 100cc space. And this is interesting because this is a space in which Hero has #1 market share. And it's also a very competitive space. And it's a space that's not been doing too well because of the slowdown that we've seen in rural markets, in tier 2, tier 3 cities, etc. So this launch yesterday by Honda raises concerns about Hero's ability to retain its #1 position in the market. In fact, the pricing of the Shine 100cc is also quite competitive compared to the current players in the market. Now, Honda, the management spoke to my colleague Santhia yesterday, and they did mention that they are looking to increase their touch points. They're looking to get into tier 2, tier 3 cities in a big way. And UBS put out a note where they said that Honda, of course, is a formidable player in the 125cc plus segment. The entry into 100cc bikes with the Shine brand, which is very strong, is something that could destabilize Hero's #1 market position as well. So it's a potential, threat to Hero. But for now, the stock is not pricing that in. Perhaps early days yet. Back to you.
Our aim is because now the global basis also in India, especially rural customers are struggling to get enough strong financial background. So our responsibility to offer more affordable the price with high quality product from our side to rural customers. Last 2 years we studied a lot. So what kind of customer behavior will be needed? What is minimum requirement for quality? So make in India, of course, but constantly in India. So from the beginning till the end. Therefore, now we could show such kind of today's announcement price in front of consumers. Other segment also can be considered. A more attractive the cost structures in front of consumers, because nowadays all of economical cost on the consumers, the high pressure for their own lifestyle. So therefore, how to make it offset versus the environment changes to avoid additional cost up or price up in front of consumers. This is our responsibility.
Mr. Agartha, since you spoke about rural economy, the
Yeah.
condition of Indian rural economy,
Yeah.
so my question here is, considering that affordability part,
Yeah.
tier 2, tier 3 cities are your target groups.
Yeah.
You have already answered that rural India is also going to be on your radar.
Yeah.
But considering the current situation of Indian rural economy,
Yeah.
is that aspect a cause of concern for you and your product?
Yeah. So therefore now.
Despite the affordability.
Yeah. Of course, the very difficult to say such kind of, but anyway, tier 1 is mainly the big city or big town. So the such kind of consumers has the strong financial background. So they are riding on the automobile and the scooter with a bit high price. But tier 2, tier 3 is still town, village, or smaller city. Such kind of consumers, also road condition is not so good. So therefore, motorcycle segment must be they continued even after 5 or 10 years. So therefore, our focus in front tier 2, tier 3, the consumers, they are waiting the Honda product with affordable price. So therefore, today we unveil it. They how to bring this kind of good product in front of consumers with a touch point they cannot find out. So therefore, our responsibility to gradually to increase of touch point inside of tier 2 or tier 3. So they under the main dealers. So that is we are saying associated dealers in a smaller shop. So now we officially they open this kind of concept. So now we have more than 6,000 touch point, but of course it's not so enough. So we continuously effort to make a touch point inside of tier 2 or tier 3 from now.
Right. I also want to talk about the slowdown in the 100cc segment, and Indian rural economy being under pressure is one of the key factors here. And now with the possibility of a weaker monsoon and El Nino effect looming all over us, the view is that the recovery now will be feeble. What I want to know from you is, according to you, talking about the recovery to pre-COVID levels, when do you see that happening?
Yeah, frankly speaking, for my personal expectation is it take additional 5 years to be back to the previous pre-COVID level, because the last 5 years we are seeing a very, very tough time of automobile or motorcycle industry, especially automobile motorcycle industry last 5 years till now. So now they gradually start up the recovery moment. But I think it's very slow momentum would be happen, because very tough time, the global basis. So therefore now we launch this model. It's best timing in front of them.
All right, that is the Honda management talking about how they see this model really working in the rural areas, as well as some of their concerns with respect to the rural economy and the fact that we are seeing a bit of a slowdown. But with that, we do need to get into a short break now. When we come back, we're going to discuss the market technicals with Kush Bora. It's a very volatile session already. We'll also bring you some top trading bets that he has at the moment. Welcome back. You're still tuned into Trading Hour. The market is very volatile. For now, we're seeing around a 55-point gain on the Nifty. So around, over 100 points from the lows of the session. And the Nifty Bank has also seen a recovery, although it has come off the highs as well. So for now, it's an 80-point gain. We are definitely attempting some kind of recovery. So let's tell you how to play this market. Kush Bora is here to get us a quick technical check. Kush, like I was pointing out, we opened quite flat. We saw a 100-point fall, a 100-point gain. All of this has already happened. It's just 11:30. Do you think this kind of an attempt that we're seeing at a recovery can hold?
Hi, Pavitra. First up, thank you for having me on the show. The simple answer is yes. But let me start with the premise. The fact that, I discussed, the markets in a falling trend from 17,800 onwards, which seems like a distant history right now, but it wasn't, even before. It was since the beginning of March, right? So that's already there. I also believe that the bottom is not in place yet. We may slip further. But with that premise, let me also share a few data points which suggest that a rebound was around the corner and perhaps is already underway. Where at the lower end of a downward sloping channel, Nifty and Bank Nifty, both the RSI had slipped briefly below 30 and the PCR was also in oversold zones. So these were the signs were already there that we're already in an oversold territory. A bounce was around the corner. And if I can join the Oscar party a little late, the RRR didn't seem favorable at all for shorting, which is the risk reward ratio, did not seem favorable for shorting. So I think a bounce is around the corner. It's already underway. I won't be surprised if Nifty goes to 17,200, on this, upward journey. But as I said, beyond this is where we'll consider whether it's a buy on rise market, a kind of a scenario. Up until then, it'll remain a sell on rise. But for the short covering bounce, 16,900 is where I would place my stop loss. 17,200 is where I would have my target on the Nifty. 38,600, today's low, is where I would place my stop loss on the Bank Nifty. And 39,600 to 39,800 zones is where I would look to, exit the Bank Nifty on the upside.
Okay, that's a call on how you'll play the Bank Nifty. Kush, that was an interesting analogy, by the way. The RRR of a trade, the risk-reward ratio. I'm going to remember that. Okay, so what about individual stocks? Where do you see positive RRR there?
Well, a couple of pockets. I think this is going to catch on, right? A couple of pockets, certainly. One from the financial services space. I had this talk on my radar for a very long time, but now that the markets are supporting, I think it's a good time to initiate a call on this, which is Cholamandalam Finance. The stock has been in a bit of an uptrend. It's been sideways along with the market, but it's still respected its 50-day moving average for some time now. So my idea would be here to enter this for a stop loss of 740, 765 is where I would place my target. The second stock is AkzoNobel. This stock too has been in a very strong uptrend from about 2,100 odd levels, beginning March. Today we are seeing this in a bit of a profit booking, but that's actually a good entry point. It's just come off its highs of 2380. It's about 100 points down from there, so it's a good entry point. The momentum will continue for the paint stocks, but AkzoNobel would perhaps lead that rally. So AkzoNobel is my second pick. 2350 is where I would place my first target. 20 to 40 is where I have my second, where I have my stop loss.
Okay, all right, got that, Kush. Thanks very much for the updates over there. You have a good rest of the trading day. We'll take a break on that note. On the other side, discuss market fundamentals. Rajesh Baheti of Cross Seas Capital Services will join in. Welcome back. Well, never count your chickens before they hatch, as they say, and look at the market. Holding on to any sort of a gain is always proving to be difficult. So that every time there's the slightest bounce, 40, 45 points, you're getting sellers come back to the screen. So it's still around that flat line, not going anywhere really. Let's get some fundamental ideas going with Rajesh Baheti, Managing Director of Cross Seas Capital Services. Rajesh, thanks for joining us. It's been a very, very interesting market. You tell us, are you out there with a shopping list of sorts, or are you staying on the sidelines and waiting for this noise to settle?
Typically, at the end of March, in any given year, you will see a lot of books being closed, the margin financing books, or the books that are not disclosed as margin financing, but we all know that they happen, the leverage books, and they all get closed. So there is anyway pressure in March. And come April, I think of new books open. So typically, March is a month to buy and sell in April if you want to do a short-term trade. This time, I think the opportunity is even better because by itself, the markets are weak and there's some kind of capitulation you can see across sectors. Having said that, if you look at the chemical sector, widely, I think stocks are 50% of the highs. So that's a one sector I would be interested in looking at to buy in March for a 15-20% pop, if at all.
All right. Hi, Rajesh. Good morning. This is Pavitra. Would you also look to buy the banks? That's a space that you've been positive on for a while, right? So with the kind of correction that we're getting now, would you use that opportunity to add the banking names?
Yeah, so essentially, I think, everybody needs to understand that at the very core, every bank is kind of running a Ponzi scheme, not in a derogatory sense. But the fact is, if everybody lines up at any bank to pull out their deposits, the bank is going to go under because all that money is used up. Some of it is locked up in HTM, which for the time being may not be making money, as is the case with most US banks, with the interest rates having gone up by 400% in a year. In India, the interest rates have moved up by 20-25% because we never went sub 6%, and we are at 7 point something now. So from that point of view, I think the Indian banks are much better positioned, whether it's the sale portfolio or the hold to maturity portfolio. So it makes a clear case for buying some of these Indian bank names that have been hammered down just because a couple of banks had liquidity issues.
Okay, got that. Rajesh, tell us a little more about your thoughts on the FMCG sector. Very interesting sort of trades playing out over here. Till yesterday, there was absolutely no move. That classic rush to safety that we get every time the market goes into a tailspin, that's not really been playing out. Today is a bit of an exception. How would you look at consumer companies given that inflation is still a challenge, right?
So, consumer companies historically have been priced much higher than their global peers in India. And it's always a difficult call whether you should buy these companies or not because they're trading at 40, 50 PEs. So one way to look at it is, of course, there's a rush to safety. There's panic out there in the street, and some of these names will get bought into. But I don't think they make a case for investment because I think we're going to slow down in line with the rest of the world. And consumer spending, discretionary spending will also slow down. So apart from maybe some really, FMCG names where the demand is inelastic, and if you want a hiding place, I don't think it makes a case to buy any of these names right now. In fact, some of the other sectors such as banking, chemicals, and industrials are looking much better placed for a buy now for a 15-20% pop.
All right, got that. Rajesh, another space I want to ask you about is the real estate space. This morning we had DLF confirm that they did, in fact, clock in those sales at their Arbor project at Gurugram. So that news piece is confirmed. We have been hearing about how luxury sales for the real estate players have been very strong. The index, of course, is not done very well this year. It's down around 11%. But do you think this space is good to play right now? The entire real estate pack, or at least the luxury players?
So a couple of things about the luxury play, from next year, the tax incentive to reinvest capital in a personal house is going away. So there may be a March rush to lock in some properties, and that's why you're seeing these big ticket deals. So come April, I think this scenario will get rather more challenging. The big problem I find is how to value real estate because there is a lot of cash component when you're going for clearances, when you're doing all this construction and other things. And towards that, I think some of these companies do have to recover some cash also from their buyers. It's a very, very hard call to make, but I like some of the South-based realtors because traditionally, I think they've been far more professional in their approach, and the cash component in maybe Southern India is far less than what we see in Northern India. So at best, I think Sobha is looking cheap, but I won't make a larger call on this sector because I think just valuing it is a rather difficult task.
Okay, Rajesh, we are in a pretty topsy-turvy market, but I think a lot of people out there are also thinking of medium-term portfolios, not looking at the immediate tomorrow. So for such people who are looking at this market from an investor's lens, would you leave us with maybe a couple of ideas?
So the only idea I leave investors with when they want to build medium-term and long-term portfolios is find a good portfolio manager or find a good mutual fund. Don't try and trade this market or invest in this market yourself because despite the fact that there has been democratization of information, there is still information asymmetry, analysis asymmetry, and the professionals do a good job of managing your money. So go out there, put your money in funds right now. If the markets go a little lower, get even more aggressive and put more money. But don't try and buy individual stocks. The ideas I discuss here are broad themes, but not really for a long-term portfolio. I think you've got to look bottoms up and find a good portfolio manager.
Rajesh, we were really hoping that you're going to give us some stock ideas and we would take some notes down. But good advice.
For a pop, I said, the chemical sector has been beaten down mercilessly. They're down 50% from their highs. The banks are pretty solid in India because we didn't have this interest rate rise, which went up by 400%. So for a trading pop, yes, 15-20%, I see two sectors straight away, maybe industrials also.
All right, got that, Rajesh. Very helpful. And thank you for stopping by and speaking with us today on where you see the markets moving as well as all of these individual sectors. But another important story coming through right now, ICICI Prudential Life Insurance gets a new boss as Anup Bagchi gets appointed as MD and CEO. Yash is here with the details. Yash, the street definitely likes the sound of that.
Well, certainly, and very interestingly, when N.S. Kannan, the incumbent MD and CEO at ICICI Prudential Life, was appointed, he was the ED at ICICI Bank, and similar is the case with Anup Bagchi, who's currently serving as the Executive Director at ICICI Bank and has been appointed as the MD and CEO of ICICI Prudential Life Insurance. Now, as far as the incumbent MD and CEO is concerned, his term or his superannuates on June 18, 2023, and June 19, 2023 is when Anup Bagchi is expected to take over as the head of ICICI Prudential Life Insurance. As I said, currently the Executive Director at ICICI Bank. Now, who is Anup Bagchi? And particularly from the stock perspective, why is the stock so excited? Anup Bagchi has a management degree from Indian Institute of Management, Bangalore, engineering degree from Indian Institute of Technology, Kanpur, and it's his work that really gets the stock excited and the company excited today. He joined ICICI Group in 1992, has been the Executive Director of ICICI Bank, also the Non-Executive Director at ICICI Prudential Life Insurance. He's headed the wholesale banking, transaction banking, markets group and proprietary trading at ICICI Group. Also, he served as the MD and CEO of ICICI Securities, which is another subsidiary. He's worked extensively in almost all fields of financial services, be it retail banking, treasury, investment banking, small-scale industry, payment and settlement, systems, wealth management business. And it's this kind of holistic approach which ICICI Prudential Life Insurance needs at this point of time when there are challenges in front of the company in terms of regulatory changes, in terms of changes coming in the insurance sector. This is the holistic experience which Anup Bagchi gets, which sort of gets the company and the stock excited today.
Yash, thanks a lot for bringing us all of the details. And like Yash was pointing out, the stock has, really moved up. It's up 5.5% as we speak. We do need to get into a short break now, but there's lots more market action that we're tracking on the other side. We'll also get you a very special conversation with former RBI Governor Raghuram Rajan. Stay tuned.
ए लड़की तेरा नाम क्या है पूछने वाला